Welcome everyone, this is Raja Banks, your host of the New York Session live streams. Now, you're probably wondering what SmartRajaConcepts is, and that's the reason why you've clicked on this video out of curiosity. Right now, we've been doing YouTube for a little while now. Of course, we have a lot of education, we have a lot of knowledge on YouTube. We also have Market Fluidity, one of the best Forex educations out there. We have the live streams, one of the best Forex live streams on the internet at this point. So what I have here, this is a manifesto of what SmartRajaConcepts is. Right now, I'm going to go over certain things that we will be discussing in SmartRajaConcepts. This is going to be a virtual class type education content that has never been done before, right? It's going to be done right over here. So I'm going to go over different things that we will cover, right? The first things first, right? We're going to go over introduction to Forex, what Forex is. To me, Forex is basically exchange of currencies. Now, the most important aspect that most people don't understand about Forex, and which I didn't understand in the beginning, was what sessions are there, right? How many sessions are there for you to trade? What sessions fall into your own life? Because most times what happens is that people, they want to, traders, they open up the charts and they want to trade whatever seems right or whatever that's moving. No, you have to understand which currency session falls in your time when you have the ability or the freedom to place a trade, right? That's number one. Number two, we're going to be talking about different volumes in different sessions. Now, we know there are different types of sessions out there. You have pre-Asian, you have Asian Open, pre-London, London Open, you have pre-New York, New York Open, NYSE Open, London Close, right? All these sessions, and all these sessions have volume in those sessions. So it's very important for you to understand which volume session is going to fall into the time when you know you should be trading. Secondly, we're also going to talk about time frames, right? So now we know there are 4-hour candles, there are daily candles, 1-hour candle, 30-minute candles. So we're going to talk about time frames, and which time frames are the best to trade in which sessions. Believe it or not, it's much more complicated than you think it is. Now, next, we're going to talk about currency pairs. Which currency pairs are okay to trade in which sessions? We know there are a lot of sessions, and also there are a lot of currency pairs, and not all currency pairs, they move in all those sessions. So we're going to talk about that too, that which currency pairs you should be looking at to place a trade in those sessions. Then we're going to move over to a more technical side, and this technical side is basically not rocket science. Now, we are led to believe that trading should be complicated, making money should be complicated. Making money is not complicated at all. Making money, especially in the markets, in terms of candles and reading candles and trading Forex, is actually not that complicated. It all comes down to your psychology and stuff. So next, we're going to talk about candles, right? Candles. Now, when we went over to trading only candles, only naked price action, this is going to be your introduction to trade naked price action. Only price action, right? Think about this. When you're looking at a chart, nothing but candles on it, right? And if you have nothing but candles on it, and you're like, okay, you know what? I only have candles over here. Let me add a few indicators. Now, you add indicators, you add Fibonacci's, EMAs, you add Bollinger Bands. I used to trade with Fibonacci's too. I used to trade with Bollinger Bands, EMAs. I used to trade this complicated method called divergence on stochastics and RSI. What happened? Nothing. So we're going to talk about a lot about price action. I think if you can't read candles, you can't trade. You got to be able to read candles. If you can't read candles, if you can't read what's printing on the charts, which makes sense. If you can't read what's printing on the charts, you're never going to be able to trade, because indicators, I hate to break it to you, they're lagging indicators. They always lag. Price action, the way the candles are forming, they will always tell you where price is going to go once it starts moving. So we're also going to talk about different types of candles, right? What do candles mean when they print bullish with no wicks or with wicks? What do candles mean when they print bearish with wicks and with no wicks? And in which trend? Because a lot of times you can have a candle printing a bullish candle with no top wick, and you're like, okay, price may go up, but price retraces, and you're like, oh, maybe there was no volume, there was volume. It's all about probabilities and also understanding why the candles are printing the way we're printing. So we're going to talk about that too. Next, we're also going to talk about market structure, right? There's different types of market structure. You have trending market structures, you have consolidating market structures, you have easy to read market structures, you have harder to read market structures, right? You have easy to trade market structures, you have hard to trade market structures. So this is very important, right? So going through SmartRajaConcepts, you're going to understand which market structure suits you best to trade. And it all comes down to discipline and consistency, right? We're also going to talk about the best market structure, which I've been trading for a very, very long time, which has gotten me amazing, crazy results over time. We're also going to talk about breaking down market structures from the high time frame to lower time frame. Like we all know, the lower time frames, they build up the overall higher time frames, right? So we're going to talk about those too, like how to read higher time frame candles and then break them down into lower time frame candles. The most important aspect of SmartRajaConcepts is going to be risk management. Now, we have 3 modules for risk management. The first module is where to place your stop losses. Exactly where to place stops. Above a candle, below the candle, on what time frame to place your stops. That's very important because a lot of people, they ask me, should I place my stop 10 pips away or 15 pips away, 20 pips away? It's not about that. It's not about where you're going to place your stop. It's about how and when are you going to decide where to have your stop loss. So that's going to be the first module, where to place your stop. The second module is going to be type of risk are you going to take. Are you going to take a static risk? Are you going to take a dynamic risk? Are you going to go on with a full-on entry, or are you going to go on with a dynamic entry where you're going to stack positions? This is also very important. Now, stacking positions is also called dynamic risk. It's a little bit more complicated, right? And it's also your understanding of how you're reading market structure, which will lead you to decide whether you're going to use static risk or you're going to use dynamic risk. So this is very, very important, right? The third module is going to be cutting losses. Now, if you know, I have really mastered the art of cutting my losses, right? My losses are always very, very small. My wins are always very, very big, right? And this is something that's going to be very important. And I think a lot of you people watching right now, a lot of you guys have been stuck in that break-even stage, right? And being stuck in the break-even stage is the hardest thing to get out of. People get stuck in the break-even stage for a very, very, very long time. And not until you know how to cut your losses short, you're never going to get out of the break-even stage, because at the end of the day, you have no control over your wins. Let's put it that way, right? If price moves in profits, it moves in profits. You can secure positions, perfect. But what you do have control on is the loss you're going to take. So that's where it's very important to know how to cut your losses short. And we're going to go over all the techniques I have used, utilized, showed on YouTube, done classes on how I was able to cut my losses short in every losing trade. Now, obviously, there's a probability, and that's something we're going to discuss in SmartRajaConcepts as we go along. Next, we're going to have impulse entries. Impulse entries have been very, very famous for the past 2 years, 3 years since I started using them. There are actually 2 modules on impulse entries. The first module is when to take impulse entries, right? When to expect an impulse entry. This is also very important, and we're going to go over the different times when you can expect impulse entries. Are the impulse entries are going to happen, during. So now the second module is when the impulse entries are going to happen during consolidation, or are they going to happen from what I call the liquidity candle break, right? So these are 2 things. Impulse entries are very, very advanced, and it takes a little bit of practice. It takes a lot of experience to really get them down, right? You're not going to be able to get them down in the first try, but as you see price move, against your favor, in your favor, you're missing out on trades. We will go over all the steps needed on how to decide when to focus on impulse entries. Now, if you're a new trader, impulse entries is not the best way to go. Let me break it to you, right? You have to wait for the candles to close. Next, we're also going to go over how to give your trades a second chance. Giving your trade a second chance is also very, very important. Like a lot of times we take trades and trades go in our favor for a little bit, then the trades come back and you get stopped out, whether you're managing risk or you're not managing a risk, but you get stopped out. And after a little while, you see that price actually went where you wanted price to go. Now, believe it or not, every time price does that, there's always a confirmation that you can look in the charts. And that's something we're going to go over, and we're going to teach you guys as well, that what confirmation to look at and decide that, okay, you know what, I got stopped out in this buy, and now maybe this is my opportunity to add the risk back to my trade so price can go into profits where you expect the price to go. And that's also we're going to move into giving your trade a second chance as well. So now there's a lot more that we will be covering in SmartRajaConcepts, and I think this is going to be the best Forex virtual education ever happen on the internet. There are a lot of courses out there. There are a lot of webinars out there. That's all up to you. You've seen us trade on the live streams. You've seen my FX book. You've seen the trades I've taken, the losses I've taken, the wins I've taken. Everything has been so transparent. And when someone comes out there with so much transparency, of course, it's looked at, oh, you know what? Probably this is something different. Probably this is something that was missing from the Forex industry. So, SmartRajaConcepts, December 25th, is going to be released for everybody. Just wait out for the links. Now, I know the next question is, what if I'm a part of Market Fluidity? If you're a part of Market Fluidity, you don't have to pay anything. But December 25th, again, I'm going to be so excited to present to you Smart Raja Concepts.